Alright guys, so this video is an update of the analysis that was made on this YouTube channel a few days back. I was pointing to the fact that I was expecting a rally for gold from this point up first of all to the 2050, right, and then ultimately to this point for drawn liquidity. And in that video I did mention how that the draw, this movement of price up here, was the movement to attack liquidity, and then the movement of price to that second level up there was into this imbalance, and then ultimately it should have some reaction from this supply zone. Now when you take a look at this, what has happened over the past few days, and when you look at the analysis, it looks like picture perfect, right? It was just like I was making the market. But what I want to tell you is that these are just simple rules that I use to interpret the market. And you see, the main reason for me posting this thing here is not to say to you guys that, look, I'm a very good trader. Yes, I'm a good trader. I understand I'm a good trader, but the purpose for this is I'm trying to encourage somebody who is at some point in his own trading journey where he might not even understand the movements of price. You can't even make sense of what is actually going on in the market. But I want you to be encouraged, right? And what I want to say to you guys is, if you are finding it difficult right now to understand the markets, to make money from the market, you should take advantage of mentorship. It's going to save you a lot of time, and it's going to save you a lot of money, especially now that we are going into the holiday period. This is an opportunity for you to learn, for you to improve yourself. You should come to a point in your trading career, in your trading journey, where you are confident and you are sure about what you're doing. You have a strategy, a rule-based strategy that helps you to understand the market. So you've seen my analysis for silver. It is still running, okay? And once I'm done with this video, I'm actually going to close that trade, and that has been going on for like 1-2 weeks, and that is actually what you call swing trading. And in the video to come, I'm going to show you exactly how you can establish directional bias for swing trading. Okay, how you can establish directional bias. But I'm still going to direct you back to the video where I analyzed gold this week, and even the video where I did the analysis for that silver also. It's the most recent videos on this channel, and there's a lot for you to learn in there. There's a lot to learn in there. But in the videos to come, I'm going to show you how you can use 4 key indicators to understand where price is moving towards, where price is most likely going to make some big move towards. Okay, so if you're a swing trader, that's going to be very good. But even if you're a day trader, that is something that you really need to watch out for. But let me give you a teaser. The first key indicator that can help you and guide you in understanding where price is most likely heading towards is seasonal tendency, seasonality. That is number one. Seasonality looks at historical price patterns and uses that. You can now use that to understand what the likely trend of the market is going to be for certain times of the year. That is seasonality. Okay, number 2 is price on a higher time frame. So with price on a higher time frame, you can check to see if where price is trading at, whether there is some high probability of price reversing, or there's a high probability of price continuing in that existing trend, and then you can align your trade accordingly. The number 3 thing is the COT data, which reveals to you how the institutions are positioning themselves. It is either they are at an extreme positions, they are accumulating, or they're distributing, or they are not concerned. Okay, how the institutions are positioning themselves will matter a lot in understanding where price is going to trade towards. It will matter a lot to understanding where the strongest strength of the market lies. The number 4 thing is what I call market flow analysis or intermarket relationship. Understanding the relationship that exists between different asset classes and different instruments can help you to know what the big institutions are doing, what is most likely going to be devalued because of the increase in value of some other pair. Okay, so it can help you to understand the dance move of the market, because the market moves in a rhythm. It moves in a rhythm, just like I was making this analysis for for gold a couple of days back. I showed you that part of the reason why I was expecting for gold to rally and come over to 250 and then ultimately to this point was because I'm expecting an upside for silver also, coupled with the fact that we have the structure right here. Now I've done the structure analysis, I've done my analysis for professional trend bias and stuff like that. I've done all of this analysis here, but I still had to look at the market flow analysis because it will give me a very clear sense of the direction of the market. It gives me more confidence, right, to trust what the other tools are showing me. So I'm going to be doing a video on that in a couple of days to come. So I want you to stay tuned. If you're not subscribed, subscribe, and be expecting that. So learn more and earn more. Cheers.